Discord Trader Lab and also YouTube. Thanks. Okay, is my audio coming through in the Discord? I'm not getting any responses. Okay, great. Thank you. All right, good morning, everyone. Welcome to the Traders Lab. I'm your host, Tom B., streaming live from Costa Rica. And I just want to remind everyone, if the internet goes down, which it can for no reason other than potentially monkeys swinging on a vine or something, that I will do my best to come back. If you're in YouTube and I do lose the link, I might not be able to get back in. You can look for a new link being posted or come to the Bookmap Discord Trader Lab chat. There's a link in the bottom of YouTube if you want to continue following the stream. And you do not have to be a Bookmap subscriber, and Bookmap would not solicit you if you do come to the Trader Lab. Also, there's a lot of additional free information available to everyone if you're interested in what we do here in the Trader Lab. Now, today was pretty interesting, and it still is. There's a lot of opportunity, and I will be sharing structured trades that are available to all of you in the Discord Trader Lab. And these trades are actually structured in the sense that you can download 60 PDFs of them and follow along. Not only can you follow along with the trades I will be reviewing, but you can also anticipate them once you put some time and energy in. Also, if you have questions, please feel free to post them. Are you guys getting double audio? You are. Well, that's kind of nice. Look at that, stereo. Hold on. Let me just see what's going on here. Tell you what I'm going to do. I'm going to close one of these Discords down. And now we should not have double audio. Let me know. Is that clear now? There's no double audio in Discord. It's back? What's back? Is it gone now, the double audio? Okay. All right. Look at that, 2 for 1. All right, sorry about that, guys. If we need to add another one in Discord, I'll try it again. Okay. Okay, let me try one other thing here. Hold on. I think I know what it might be. Okay, that should do it. Did that solve it, guys? The double audio, yes, it did. Okay, great. Thanks, thanks so much. Thanks for letting me know about that. Again, welcome to the Traders Lab. If you have questions, please post them in the chat, both in YouTube and the Trader Lab. And of course, please keep the comments or the questions to specifically what's going on here in the stream, so we can be most productive. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. This is based on structured trades that are available to everyone in the Discord Trader Lab. As well as a library of webinars, starting out with a primer overview of this process. This is based on using a high-tier order flow tool like Bookmap and integrating it with auction market theory. That's how the market works, and using a tool called the volume profile in the intraday developing time frame to attempt to get into alignment with context being the condition of the market. And of course, the joy for us as traders is that the context is not static. It is constantly evolving. So the thing about it is to try to develop a process, and to me, process means conditions, conditional statements that help you define the condition of the market and also recognize potential developing change. And the other part about that is the market, since it is not one-dimensional, will change from directional to rotational and either continue its primary direction or reverse, and anything can happen. So if we can accept randomness, and this is really the basis of trading, is operating in a random environment. If you can remove the need to be right and the need to predict, and most of us, because of our psychology, we need certainty and we want to avoid risk, and that's all natural to our wiring. And it's really how we've been successful as a species, running from risk, seeing the saber-toothed tiger going the other way. That's all worked out pretty good. And today, the saber-toothed tiger might be stepping in front of a bus, and you jump out of the way. You're not thinking about it. Well, all that wiring is still active. So when you come to trading, you're intentionally stepping in front of risk. You're intentionally seeking certainty. You're seeking approval. Just like when we were children in school, you raise your hand and you wanted to get the teacher to call on you, and hopefully you had the right answer. And when you're really little, and I don't know if they do this anymore because they might say it's assault, but when I was a little kid in school, they give you a little gold star or something. Anybody ever get that? Might be showing my age. But those were all the things that created approval and the need to be right. So yes, gold star, thank you. So the thing is, that's part of our socialization, our approval from our parents, our peers, our competition, all these things. So let's say that's all part of our wiring and our experience. Now, I'm only spending a little time on this because I want you to understand trading is completely counterintuitive to all those experiences and conditioning. So when you step into the trading arena, you're bringing it with you. This is what's going to cause you not to take trades that you should take, to want certainty, to use indicators and overlay indicators on indicators. And the goal, and not even necessarily consciously, is to try to squeeze risk out and create certainty. Now, you might think it's logical to want more winning trades, right? But you got to get past the surface and think, why do we add more indicators? Why do we look to create more certainty? And it's not just because of P&L. Now, we do measure ourselves with P&L, but the fact is most often retail traders are paralyzed by those needs. The casinos are our model of a business model, and the casinos are not paralyzed when a gambler walks out with a suitcase of cash. The casinos play the game exactly the same way, and the only reason they do it is because by having anchored inputs or playing the games, or in our business, setups exactly the same way with anchored inputs, not random inputs, they understand they have an edge, they can extract the edge, and they're not attached to the outcome of any one trade, the next trade, and they're not even trading the next trade based on what happened on the last trade. Just like the last hand where someone walked out with $100,000 in the casino, they don't change the game because of that. Take that thought, please. Put it into your head. Write it down and reflect upon your behavior. And you got to sit back and reflect what is really going on, not on the surface in your conscious mind and behavior, but beneath the surface. What is guiding and driving you? Is it intentional behavior, or is there something else? And this is what we work on in the Trader Lab. Now, I'm not going to spend a lot of time on statistics because all of this is available to you based on the collective experience of Trader Lab participants and also individual members' contributions in the Trader Lab. It is a team, if you will, and it's individuals leveraging their collective experience. Now, let's go into the open. We had a bullish report, and I'm just going to give you a couple of things, some joy, some things you can think about. Now, this is our TH open. So before the market opens, and I do this the same every time, we have levels. And the auction market theory is based on levels. Levels of what? Levels of behavior. What creates the auction? It's the interaction of buyers and sellers. And you're going to go, well, that's pretty brilliant. Buyers and sellers, yeah. But let's call them participants. The participant interaction, what's the purpose of a market? It's to figure out what something is worth. So what's too high, what's too low? Wonderful. Well, what is too high or too low? Well, I never know. Do you know? Early on when I was learning the trade, and this is starting in 1980, I thought it was prediction. I predict it's going to do this, it's going to do that. Well, after, let's say, a number of years of headbanging, this is before, what was the headbangers, man? I don't even remember. You know what kind of music I'm talking about. Apparently I can't remember. But, I kept waking up in the same place. And that was, I was trying to predict. And the problem with randomness is you get it right sometimes. So that makes you think you're on the right course, when in fact you might be going off a cliff and not even realize it, because randomness is what the casinos live with. And as traders, we live with randomness. So let's go back to these numbers. We had a major report this morning, and that's at 7:30 Central Time. This is the location of when the report came out. And it's called Seen the Crime by some. I think it's a reasonable label because it's when an event took place. Kind of stands out. And I mentioned yesterday it was Morad Asghar who came up with that term. I'm not a huge fan of a crime, but I think the scene of something material that disrupts the auction is worth noting. So I write that down and I put it in here. These are low volume areas from the ETH. And the ETH is over here. I'm going to see where you see these indentations means there's less volume here than there, for example, than there is out here. So low volume, high volume, low volume. And what these typically show you are rotations or consolidations. So too high, too low retail. And the job of the market is to figure out what's too high, what's too low retail. And it does it in all time frames. And I don't think of time, but we can discuss time, but fractals, because this is not regulated by 15 minutes, 30 minutes, 1 hour, 4 seconds. It's regulated by participant behavior. So I don't think of time. I believe me, I did. And, we all do the same thing, 5 minute, 1 minute, 15 minute, 30 minute, right? Oh, it's all wonderful. So scene of the crime, low volume area. This is low volume in an intermediate time frame. So it's the same as these, but higher time frame. This is called naked volume point of control. This is, I hope I got the right level on here. I always forget some of these. This was, and you guys in the Trader Lab, maybe you can let me know, was this an open level? This around 12 and change. I don't remember if it's current or not. The 4834-ish. A naked volume point of control, another retail price. A volume point of control is just high volume. And what it was is a location where high volume takes place. And it's trading and shopping are very similar. The shopping experience is where's high volume. You go to store. Okay, thank you. On the 12.5, yes. So this is an open level, which is a potential target if we come down. This is a target if we come up. Yesterday's high is a target if we get there. We have also, let me open this up a little bit more. Overnight high or ETH high, open, value area high. These are all potential targets, okay? This is a target up above, and this is a target up above, and who knows, right? And another extended target. And I post these, some of them in the morning, and if you're in the Trader Lab, you already know all of this. Now, I'm going to give you a couple other pieces, and then I'm going to move on. There's the overnight mid. You know what? I'm not going to do this. I apologize, because I want to get into the trades. So here's what I'm going to do. If I get to something meaningful, I'll pause for a moment. Now, so what are we doing? We are opening inside of yesterday's range. Here's our open, right near the ETH high and yesterday's high. So, and this is our potential target going up. So potentially, underline, I'm going to be looking, because of the nature of opening out of value, which means where most of the volume took place yesterday in the RTH. And you remember what happened yesterday. We're on the short side in the morning. It was very nice. Market turned around and then it reversed, and then it came all the way back up. So that part of it went outside of the plan for staying on the short side. So once some of those locations got violated, then it was either get long or stand aside or go to the gym, subject to your plan. So, which is fine. That's trading, right? So, and today we're going to see similar behaviors, except today we might have had a better opportunity to trade from both sides. Now, I want to point this out to you. This liquidity sitting here, this is called resting liquidity. It has meaning to me. And Bruce at Bookmap does streams 9 a.m. Central Time, Monday, Tuesday, and Friday, and he focuses on order flow. I suggest if you are interested in how to use a high-tier tool like Bookmap, he can give you further insight on the nuance, because the fact that algorithmic behavior takes place here, it's not material, it's part of it, but is material is resting liquidity. The behavior, if price and liquidity meet, if it stays in the book, and then what happens afterwards. These are part of the nuances that you can learn with a high-tier tool like Bookmap, and it's all part of the mix. But well, like I always say, this is a priority of inputs. So I considered the auction and volume profile. What I do is I considered them the chassis everything is built on. And then you get a tool like Bookmap, and I call it the tip of the spear. And I cover all this in the primer webinar. And I always like to say, because I'm surprised, I haven't looked at it in a while. It's got about 27,000 views, and it's free if you guys are interested. It talks about this process. It talks about the business of trading. And if you want to be a career trader, in my opinion, you got to understand the business you're in. The business you're in is not a video game. Now, if you want to play a video game with dollars, then, you know, that's okay. They've got those in casinos also. They're called slot machines, and they'll give you cocktails. I figure you should go for the cocktail and the ticket to the buffet. But if you want to be in the business of trading, I'm going to suggest it's probably not what you think it is. Just an opinion, and everybody is different. So this is the RTH open. There it is. I'm opening at the high side of yesterday's range. This is my target, and I'm looking for a long. And again, I'm clueless. And I use the term clueless not to depreciate myself. I want to, but it's to keep my mind open. Because if I have an opinion, and this used to happen, when I was predicting early on in my trading career, I'd have an opinion, and unfortunately, that would shut off everything else from coming in, because my mind would filter what else was coming into the, say, in the mind, because I'm looking to be right based on an opinion. So I would only see the things that supported, my bias. And that bias, might be right or it might be wrong, but I wouldn't see the change. So I really limited my opportunity and increased my risk. Again, past performance, not indicative of future results. So let's look at the first trade. Now, these are based on Trader Lab structured trades. Past performance, not indicative of future results. What that really means is you got to vet these for yourself. Now, in the Trader Lab, of course, this is kind of what we do, right? It is what we do. But each individual trader finds their own rhythm, their own time frame, and does their own thing. So this is the chart volume profile. It's just going to show me the volume starting from what's on the chart from here, which is RTH open. This is the session volume profile. It's going to just show me all the volume as it comes in. Overnight high, RTH open, yesterday's high. Okay, so this is our first target, and then the naked volume point of control. So let's look at the first structured trade. Now, who knows, right? So open. So I'm looking to see who takes control. Now, there's a couple possibilities, like everything in trading. What are they? Market can open. You can get what's called responsive selling, in other words, profit taking. And then either we go south of the border, everybody sells and runs for the exit, or you get the buy-in. Well, given where we're opening, we are looking for the first indication of a buyer. So let's look. So right here, I see RTH open. I see two-sided trade right here. So up, down. This is called an open auction. Now we're in here about 10 seconds, okay? So this is speedy. And this is not something I recommend for developing traders. This takes time to recognize and develop something called unconscious competence. So I'm going to show you structured trades. But in the Trader Lab, I suggest the fact that this is a structured trade, if you can't react to it, it's not going to fit risk-reward parameters. But you need to study it and do replays. And why would you do a replay? Well, develop confidence, develop metrics. So let's look at the structured trade. Now, here's another thing to think about. And I always mention this, but you have to write this down if you haven't thought about it, even if you're in the Trader Lab, because there's so many things to think about. Where's the opening swing high? Where's the opening swing low? And I've actually in the Trader Lab, there's specifically context, I don't want to call them cheat sheets, but conditional statements that help you understand the condition of the market. And then I've shared structures that help you see where the behavior to recognize the behavior. So if you have an open auction, the market go up, it can come down and take out the low, clean the stops, and then a directional move can happen. All of these are in the Trader Lab, and it's just based on the open. A lot of energy goes into the open. And the reason is the first hour of trade is often where some of the best opportunities come in. And the ability to react quickly off the open can help you get positioned. And, of course, help you get, make your donation to the Floor Traders Retirement Fund when you get stopped out. It's just part of trading. So let's look at the first trade. So, bing, bing, buyers take control of the ball. This yellow line's a developing volume point of control. And it shifts higher. What this says, based on auction principles, as I define them, and this is just something I've developed over many years of doing this, I observe these things. I'm going, well, what does that mean? Well, if you're in the store and you could buy at S&P down here, and now there's more buying up here, that means the sellers are not selling S&Ps here anymore. They have raised the price. By the way, who controls the price in the market? It's not the buyers. It's the sellers. I know, counterintuitive. And if the buyers want S&Ps, they have to pay up for it. And if you're a seller and you see demand and that your limits, your selling is being absorbed by the buyers, you'll keep raising your price, right? And if the buyers think they want S&Ps and they can't buy it here anymore, and for some reason, if they can't buy it here, this potentially can keep moving and price will be moving with the volume. It's the same as when you go to store and shop. They raise the price. You want a can of tuna. It was $1 here. Now it's $1.15. You want tuna. You're still going to pay. You're going to pay $1.15, unless, of course, you say I'm not paying that, and then you don't have to buy tuna. But if you want your tuna, you're going to pay the retail price. So right here, this is saying this is potentially underlying too low. That's why I label it. I call it a variable high volume node. So this is right here, VPOC migration. This is too low. This is potential long in the Trader Lab. The stop would go possible two places potentially, under here or under the swing low. And why would you think about the swing low? Because there's going to be stops there. So you have to decide here, long here, long here, long here, stop here, stop under here. And that's subject to trade plan. What do? Come down here. What do? Do we pick it? That's a stop pick. Let's watch. Buyers come back for it. Now we're going to watch. Let's watch. So in here are longs. This was too low. So the way to do this is you're long here. If it comes back here, you're taking a long here. Stops we know are under this swing. It has to fit your risk-reward parameters. So this, subject to your experience level in the Trader Lab, would be your long, and their stop should be under here, if that fits your risk parameters. Now, it looks like it's a big move, right? It's only a couple points. And now, where are we going? Here and This is just one trade, by the way, in here. And what's the other thing? Right here is liquidity. We're going to watch that. And it's something I don't normally get into, but I thought today I pointed it out and posted it in the trade alert. So notice here, we shift up. So what does this say? Too low, too low. Let's label this. This is a very slow process, not when we're trading, but when I'm sharing and helping you guys understand auction market theory, shopping. You never probably thought trading was shopping, did you? Well, it is, in my opinion. Next target. Looking good, Lewis. Oh, hold on. Now, VPOC migration. So let's label this too low. You'll see why. Now, we have higher targets, right? Now I was going to share something a little different with you here. This 34, this level here, I think it was 34. Let me just see where it is here. It's a little different in my heat map. This level, it's this area, 33, 34, and I labeled it. So too low, retail, it was here. So now this is a variable high volume node. And it looks like we're heading higher. Okay, so all is good. And we have targets above. So as far as I know, because I know I don't know and I can't predict anything, this is the outside area. If I clear this, we can accelerate. This is a low volume area in a higher time frame. Think of it like would be a breakout of a consolidation. And this is the outside edge. So I'm thinking, yeah, hey, here we go. Off to the races, right? Why would I think something different? Because until it breaks, it's not broken. So here, too low, VPOC migration. So now let's look. VPOC migration. All is looking good for the continuation. Now, I'm going to label it. I'm following a consistent process. So anyway, those are our longs, and you'd have a scale, and you'd be trailing, or you'd do whatever your plan dictates. Here, and here's where this liquidity was. I think this is the area, though, right? It was 33, 34. I might have mislabeled it. I don't remember. But this is where things, so we're going up, up. So what it's saying is more volume, more acceptance, more volume, more acceptance, more volume, and you see the buyers looking good, Lewis. Now, there's a little bit more going on in here. Sell icebergs, 3,500 sell icebergs. So, and that's happening here, right around our liquidity, okay? So what happens is with liquidity, we went into it, we absorbed it, but what is liquidity? Well, it's resting orders. 843 icebergs, 457 sell icebergs, 996, 3,500. There's a lot of heavy selling. So this is how Bookmap is giving us some insight. So right here. So I know this liquidity was resting here. So I label this and I look at it as support, because if the buyers could take this out and we pull back here and test it, which is why I labeled it, I think it's just a hair off a little bit. We're off outside of yesterday's range, yesterday's high, then I'm looking for the continuation. Everything's saying going up. Having a great time. Get the champagne out. Now, all of a sudden, this. So look at all this iceberg selling. I'm just pointing this out to you. Now, I don't know when I see this selling, what's going to happen. Have not been granted that kind of vision yet. Magic 8 Ball doesn't answer when I say, is it going to go down or should I stay long? It says ask again. You know? 1 second, guys. I've got a large, I'm in Costa Rica. There's a large insect here. It's making noise when it walks. Thank you. Now there's one less. They won't miss them down here. So right here, we see a seller. 34, this area, this liquidity is support. Let me show it to you. Break high, hold, break high, pull back, hold. If you look in the PDFs that are free to all of you guys to download, I have structured trades that are built around this. This in of itself becomes a support area. It can be used for trade management. I usually give it a little room. It also could be an area to get long again in alignment with this. So subject to, if you thought the market might go higher, and there's no reason to think at this point it wouldn't, VPOC migration. I'm showing something new here in the Trader Lab, just sharing, and it's not a recommendation. It's one of those things that has to be vetted, and you know, it's not like a primary input. It's tertiary. I'm going to show you so you can kind of see what this looks like at the time. Okay, I'm just going to show you. Here's a distribution. A distribution is rotation, right? High volume, retail. That's where the yellow line is. When we break away from it, we leave this. This is a consolidation. And we start a new consolidation here. Too low, too high. Remember, rotation, high volume. Now, so this is low volume. And why is it low? We didn't spend time there. We ran away from this balance area or consolidation. Whoop, off you go. So now we have this. And it's right at yesterday's high. It's low volume, which means we're rejecting this at the moment. And we have this in alignment. This is a potential long here. Just saying. Anyway, I wanted to share that with you. And notice what it does. Support. Is everybody tracking? Can you see this? It's kind of a little something different I wanted to share. You know, just kind of keep you from hitting your head on the keyboard. Are you guys tracking? So right now everything's looking good for the north of the border. Okay, so let's come back. So 34, this actually here, this is our area, this is our low volume node. As long as we're up above here, looking good, Lewis. VPOC migration, everything says it's the sun is shining on the longs. Then, watch. We pull back to VWAP and mid. Right here, now let's look very carefully. This is retail. This was too low. This was too low. We break below this. We break below this. Now, remember, what was support, right? This, and I think wherever it was, right? Somewhere here. So right here, we break below. Now, this sets up a potential long out here in alignment with the low volume node. Yes, test of yesterday's high. Right here, take the stops at the mid, and this sets up a structured trade in the Trader Lab called the VWAP or mid to VPOC. So the trade is from here to there. Now, let me show you one other piece. This. We have to get above this. So let's look at what this says. Let's speak market. Retail. Looking good, Lewis. Where's our support? Here. What is this? Last retail price that was too low. Think support resistance. It's the way I've kind of mentally think of this in the sense of a shopping experience. Did you ever think you'd be going shopping when you went into trading? So this right here was too low. And I'm going to replace this. And remember, we also have support right around here too. So we're going to, let's just pretend this says VHVN. I don't want to take the time. So we break below. I get along. And I need the following things. I need to clear this, and I'm looking for it to go here. That's the trade. And then continue. Because at this moment, right here is our outside edge of this consolidation. What's at outside edges? Stops. And if this, and remember, when you have a consolidation, you've got shorts up here, sellers. So buy stops here. And what's on the other side of a consolidation? Sell stops. So if we come outside, it's very possible to pop these guys on the outside edge and then come back to the mean. That's what's called mean reversion. Is everybody following? How are we doing in YouTube? So right here along, and you would not achieve your scale if you're going for this and looking for the continuation. Right here, when we fall out of this and come back inside the range, it is time to, as they say, put the helmet on and head for the exit. So let's watch now. Now here's the indication that there's trouble in River City. Here. And you don't know until hindsight. So now you see your seller. Now you see that you've fallen out. Now you see you're inside yesterday's range. Everything changes. So let's watch. So now I know this is too high. Wouldn't have been nice to know sooner, but you know, this is the joy. This was too low. So too low, because remember, right? This now is too high. Great in hindsight. Here's my break. And here's what's key. This. We took this out and we're inside the range. This changes it. Seller, pull back. Where do I pull back? Here. So what do I know? Too high, too high, too high. Seller, I need to regain this. So let's look. Also, what's the condition of the market? Everybody is long. Break, micro volume structure. Let me take you to fractal world. And by the way, fractals are micro structures of these structures. Like this is all the volume in this consolidation, which is basically this whole thing. Okay? That's what we're looking at. If you look at the profile on all the way to the right, it's the volume from here down to there. And that's a consolidation. Too high, too low, too high, too low. Inside of this consolidation, and I'm taking you down, think Russian doll, is volume. You can see it right where that white line is. I'm now isolating this. I see my seller. So now, what do I know? This is too high. I fell out. You see the urgency. There's my seller. That's what creates this low volume. I've rejected this. I get my seller. I now consolidate again. I get my seller again. Look at this little box right here. That's consolidation. Seller. There's volume in here. Look to the high volume note. Let me get this thing down here. Come over here. Come on. I'm using a trackball. Sometimes it's me. There's the high volume. Seller, too high. This is a short in the trader lab. You'd be short. Now, it turns everything around. Let's look. Where's our targets now? This. The overnight mid, and this are the next target. I'm going to just throw a stat at 72% probability we're going to get there. Past performance not indicative of future results. Overnight mid plus this. I think 70% probability, right? If I'm thinking correctly, which is hard to say. Then we have this out here, which is a microcomposite low volume node. Now there's more. So you'd be on the short side, and there's more. So let's just keep going. Now, and I narrated some of the, I don't remember, but I'm active in the Trader Lab, obviously, and I narrate these or give levels. I don't call trades. Doesn't do. If you guys are in trade calling room, you're missing the point. You might as well just give your dollars to an advisor and let the chips fall where they may. You're not a trader then. You're just a hobbyist, and you're doing it for the adrenaline. If you want to be in the business of trading, you need to be able to figure this out in the sense of have a business plan and have a process. This is just an opinion, but the Trader Lab is about becoming a career trader. And I'm going to tell you, if you want to become a specialist, you want to be a high performer in a competitive environment, nobody's going to give you the keys to the kingdom. I can't give you the keys to the kingdom. I can show you what I think you can build on, and give you 60 PDFs of structured trades that you can reverse engineer. Then you just fit the pieces in that align with your psychology. You know. Anyway, so you have a short. This is your target. Notice where it comes. Now, these are all on the map, the trade map, before the market gets there. Why would the market come here? Because it was a retail price, and the market works in fractals. You see? So this is a target here. And then we have overnight mid. That's all fine. So, but I trade volume to volume. So what I'm showing you guys is, and I'm going to show you, this is another structure trade. When I'm using microstructure, like here, I'm looking at this volume. Think Russian dolls. On top of that volume, and think support resistance, this was too low. Just like your support resistance, what was too low, if we fall back to it, it can either be support again or resistance. Well, considering where we opened, you know, and we took out yesterday's high and we've fallen back in the range, that is a story. And the story is we got too high. Do we know? No, until we know. But we certainly, I'm not hearing anything verbal going off. Actually, hold on. So we pull back here. So you got the short. I got a little distracted by the question. I wasn't sure what that had to do with the stream, really. So it was about verbal. Maybe you guys are hearing some audio leaking through. I don't know. Apologize if it's distracting. So this is a pullback. So this is the mid. This is the VWAP. The high volume is sitting above us at the time. So if we pull back, and don't forget, I have this, which I already tested. So this right here, oh, there's one other thing. We have a structured trade that's going to set up here. Let me tell you what it is. At 9 o'clock, and this is thanks to Rod, one of our Trader Lab participants. He shared some stats with us that are very interesting. There is approximately an 86% probability, past performance not indicative of future results. You need to vet on anything you hear from anybody for yourself, that we will take out either the first hour's high or low. Considering we're doing the Acapulco cliff dive, the first half hour's high or low is right here. So that's established at 9 a.m. So basically here. So, and we take it out here. Then, based on that, I'm going to give you another stat, and please be patient because I got so many statistics, and this is available to you guys to vet for yourself in the Trader Lab. Here, let's take a look. So after the I below 30, there's a 66% probability that the first hour's high, called the IB, the first hour. So let's go back. So 9 o'clock here, if we take out this 9 a.m. Stat, which is approximately, I think it's about 85-86% probability, which we just did, then there's about a 66% probability we're going to take out the first half hour or first hour's low. And the first hour's low is going to be here. So when we pull back, I know statistically I have a high probability, and I think anything over 50-50, you know, the more the merrier, right? But we're looking at, let me go back to it, a 66% probability of taking this out. So I'm going to get short for that statistic. Sorry for the long explanation, but how do you get an edge in this business, right? So this is a short from here, and I'm looking for it. Now, 930 is the IB, or initial balance. I'm running a 66% probability of going from here to take this out, which I don't know where it is yet until 9:30. So let's just look at it. Sorry, let me zoom back out here. 9:20. Oh, there's more. Now this is too high, right? Let's go back into something else here. Remember structured trades, right? We have another structured trade in the Trader Lab. Remember, it's called VPOC migration. Let's look at this one. Now I'm running at 9:30, wherever the low is at 9:30 is called the initial balance. And that's it right there, except we didn't know until 9:30. Here's the initial balance low. I'm running a 66% probability that I'm going to take this out sometime during the RTH, who knows when, and sometime after 9:30. So if I get a structured trade set up, I'm already short from here, I'm scaled, I'm hanging out, I'm working on my crochet, and I'm cruising for this statistic, and I have another target here, which is on the map from the ETH this morning. This is a Trader Lab structured short. So you have short going for this 66% probability, I think it was, I can't remember. And this is a short in the Trader Lab. And I'm going to show you the microstructure. High volume, micro high volume. There's your seller. This is too high. There's your volume. This drops down. I used to call this the anvil back when I was developing these ideas, because I would be long and this would drop on me and then I'd get splattered and I go, oh, that's interesting. What does that mean? That's how you figure out things, because you're going, I see this happen, and when I'm long and this happens, usually bad things happen to my trade. So it was that's part of research and digging in and going, why? So microstructure, same process, fractal, too high, seller. This now is too high. I come back and test it. So right there, I'm leaning on that volume, and this dropping down is a fractal of that, or a higher time frame in a developing time frame. This is micro, this is developing, seller, drop, short, short. To where? 66% probability at 9:30. Here's 9:30. So this is locked in. So this locks in my 66% probability. There's my target. Is everybody tracking so far? Okay, we doing all right? How we doing in YouTube? And guys, if you're in YouTube, if you have questions, please post them. If you're posting your trades, that you might post that in somewhere else maybe at the moment, because there's questions they stream, they roll off, and I can't see any question. And thanks, by the way, for visiting YouTube. If you're new here, appreciate it. And by the way, just as a reminder, there's 60 PDFs of these structured trades that I'm sharing with you here in the stream that you can download it from the Trader Lab, plus a library of webinars that you can look at, some up to 4 hours long of real-time narration. Right now, I can only go over the structured trades that you have, that most of you, if you downloaded them, you know what's going on here. If you haven't seen this before, it's going to probably look rather strange, right? By the way, this was our next target, and 4802 here. And coincidentally, and I'm going to say absolutely coincidentally, it's the current low of the day. No clue. Not my job. So that's our next target. So now, and I haven't seen any of this, so I don't know. Let's go take a look and see what's going on. Maybe we'll just cut to the chase. All right, this, but right here, I did narrate this one. This return to this volume sets up a short. And I did point this one out in the Trader Lab. I think I did. You guys can correct me if I'm wrong, because I can't remember anything, you know. I'm not a good multitasker. This is a structured trade. Now, it's a bit aggressive, What about that? What do you know? Who knows? So this, now let me show you the next structured trades. And I don't know what happened here. This one, I do know what happened. This right here is a short. And it's a bit aggressive. I'm going to share something else with you guys. Just add a little spice into the cake. Anyway, so this is a short. Let me show you microstructure. And let me take you back to fractals. Remember what fractals are. They're Russian dolls. Developing time frame, micro. This volume in here is the same as that, except this is in a micro structure. This is in a developing higher time frame. And let me show you the similarity. Here's your volume. There's your seller. Here's your return to test the volume. There's your short. Okay, so you know. So in other words, short is here. Stop would be above here or here. There you go. Now, but here's the other piece. This high volume is that high volume. So when it comes back here, it's the same as this coming back here. Does that make sense? So this is a short. Now, let me explain it to you. So your entry is here. This is a fractal of this. So this short is the same as that short against there. I just want to make a point. This is how you can narrate the market. And I do it in a sense of if this, then that. If not, then what? If this is too high, if this, then that. Or this here. If this is too high, then that. If it's not, then what? Then the opposite. Now we have a couple, let me give you some more trades before they happen, because I don't know. But this is one, so this is short, you know, you'd be scaled. And the job in the trader lab, and I always say job number one is to get risk neutral. In other words, buy the stop on your runner or runners, subject to your plan and vetting and your edge. You know, this is all the business. The business is, remember, this is the casino business, not the prediction business. What do casinos do? They operate in a random environment. They have no control over the cards coming out of the deck or the gamblers play. They got nothing going on. What they have is only playing games that have a statistical edge, and they play them exactly the same way. So that's what we're doing. This is what trading is. May not be what you think it is, and it's okay if you believe it's something different. It doesn't matter. Your beliefs are okay. But if you're in a random environment and you're applying random, tweaked, curve-fitted inputs in a random environment, you're going to have the same results the gamblers do. You're going to get winners and losers. They do. That's why they come back to the table. Why wouldn't the casino do the same thing? Because they have an edge. They only play anchored inputs, which means they don't change anything. If somebody walks out with cash, they play the game. The next hand is played exactly the same way. The only way they extract the dollars from the gamblers is not doing what the gamblers do. Are you doing what retail gamblers do? Or are you behaving like the house, like the casino? Casinos only play games that have a structured basis to them and have a statistical edge. In the Trader Lab, our goal is to only take structured trades that are anchored that have a statistical edge. And it's a matter then, what side of the financial table do you want to sit on? And of course, past performance is not indicative of future results. So, short, scale, stop is here. Next trade would be out here. And let me show you something a little further. Maybe out here. Remember what we have, distributions. The outside edge is up here, down here. So, let's watch. Now, when we come back inside this, the initial balance, it sets up a couple of things. It's a mean reversion trade. Mean reversion, and I always like to joke about it, and I don't know, maybe it's just part of doing this for almost 44 years. Mean. It is mean. Because you're trying to pick an outside edge. And that's what makes mean reversion very difficult. Where's the outside edge? Is this now coming back to the mean? This is the mean. Means either we're going to bounce off it, it's too expensive, and come back down here, or we're going to check and maybe blow through and come to the other side and then rotate. That's the possibilities. So let's see what it does. So this is a short, got a scale, stop is here. If we gets taken out, then we're going to look out in here someplace. So let's look. Notice what happens here. What does this look like? What did this look like? What does this look like? Let's just look. Just looking. Up here. Let's watch. Too high. Bing, bing, bing. Short. Taken out. What do we got here? Chop, chop. Break. Volume is here. Break. Short is here. That's a short in the Trader Lab. Now, whether or not you take them, who knows, right? Now, let's come back to the other side. Is everybody tracking on this? This is a short. This is a short in the Trader Lab. Is everybody with me? This short is the same as this. How we doing there in YouTube? Are you guys tracking? Can you see? These are structured trades. Now, what happens on a structured trade? What's the outcome? Write this down, guys. It's random. In the casinos, when they deal the cards, do they know the outcome of the next hand? How about no? Do they get, and here's another question, and a colleague of mine, Moby, he's in Perth, Australia. He does a stream, I think it's Wednesdays and Fridays mornings. It's ETH. So it's 7 a.m. Central Time. And I encourage you guys to check out Moby's stream. It's in YouTube, and it's also in the Moby ETH channel. So, you know, he's around for these reports, and, you know, 7:30 Central is a big report. What was interesting about what Moby was talking about this morning was not only order flow, but the scene of the crime. And he also talked about the psychology. And this is something I spend a lot of time on, is psychology, because you need to understand the things that drive you to behave the way you do, and why it actually is going to be the biggest challenge, I think, of anyone who wants to have a career in this business. I believe, and it's just personal belief, and it might vary for you, I can teach anybody how to trade. Whether they will do it, can do it, choose to do it, and have what it takes to go through the learning curve is an individual phenomena. No, I didn't say anyone can trade, but everybody, I think, can learn how to trade. The variables, there's a lot of variables, and most of them are actually psychological. How about this? You take a trade and you take a stop. Happens to all of us, right? Do you think the casino is thinking about the last hand when they're actually getting in position to deal the next round of cards? We are attached to the last outcome. Gee, I took a loss. I'm going to be real careful on the next trade. That doesn't belong in trading. Yet our emotions dictate our responses. And it seems so obvious, does it? How can we be detached if you just drop X amount of dollars on a trade idea, and then the setup fires again in the next 2 minutes? And you know you have a statistical edge, but your fear keeps you from doing it. Those are pieces, and it's only one of so many that will take you out of this business. How do we manage how we feel? That's part of what we work on in the Trader Lab, among many other things. So, and let's talk about this short. So short, scale, out. Chop, chop. What's our next trade? Let's go. Here. But this trade is the same trade. It just took some stops. And look at the order book, thickens up. This is another piece of order flow. You see how it's pressing, break, back to the volume, test. And by the way, there's another piece here. Let me see if I can show it to you. I'm going to try something here. Hopefully not make big trouble. I mean, just bear with. I'm trying to get something together here to give you a little something to chew on. Now, you guys know I'm not a fan of indicators, and the reason is I think traders confuse what indicators might be used for, where they fit and where they don't. And most of us grow up on indicators, and you think it's a plug-and-play business. I did, and I ended up with trading systems. I took it to the nth degree and spent years designing trading systems, optimization, walk-forward testing. I could spend a long time. And if you follow the primer webinar, you'll learn a little bit about my background. I was trading before we had computers or an internet. So that's not a badge of honor. It's a badge of abuse. So here's the thing. I know I have a trade here, and I know I have this trade here. What I don't know is, like everybody else, what's going to happen. I'm just going to show you something here. This is delta. I'm not a fan of indicators, but I want to show you something. This is the market pulse. And I'm only mentioning this because, you might find it interesting. I am researching this. I am very slow to put anything on, and I discourage traders from putting anything on unless they understand market mechanics. We gravitate to plug and play. It's our nature to want something to define, plug and play. Here's a toolbox, plug it in, it tells us what to do, red light, green light. We all want that. It's our nature. But if we don't understand market mechanics, then these things, these tools, any tool, any indicator is useless. To me, moving average is useless. You're going to say, why? I use a moving average. How about I used a moving average? I used everything. I had the kitchen sink glued in there and some more, and oscillators and everything. And whatever you thought of, I've probably done it. And if I haven't, it's only because I found something better. But when you spend almost 44 years trading, you get to try a lot of stuff out and do a lot of research. And when you're in a random environment, a lot of things look promising. They're absolutely random. So random times random equals garbage. And, remember, garbage in, garbage out. So what does this say? Longs are in this leg. This is reflected in delta. Buyers are up here. This is volume imbalance, volume pressure imbalance, this. So I'm looking at CVD, chart volume delta. So I'm really just looking at this leg. And in this leg, and this is delta also, the green bubbles are aggressors. Now what makes for aggressors? Well, buyers, yes. And who else are buyers? Buy stops. So that creates your buy delta. So what I see here is I now have longs. I'm just trying to isolate a leg for you. So if the market is short, the shorts get squeezed. Now the longs are in this leg. If the longs get offside, then we have these buyers and buy stops, and we have sell stops trailing up. And if I run out of momentum, and here's what I have, buy delta, and the fuel for the market to go down is to take the buyers out. The volume pressure gives me divergence, okay? And this sets up a potential short. So this can be used at locations. It's not a buy-sell indicator. It may help support. And I have not spoken about this before. There's a lot of, and it's like everything else. You really need to see where it fits. And I have to caution with a big asterisk. If you disregard everything and you start thinking sell, buy, you're going to have a substantial problem, in my opinion. Now let's look further. I come back here. Market is still right now. You notice how this changes. So you really need to understand what you're looking at. It is not mechanical, and you really got to understand what's going on here. So let me just move this forward a little bit. I did not intend to spend time on this, but I thought you might find it interesting. And I don't I don't use this in my trader, but I look at it and I think about it because I'm very slow to add and very quick to remove. Because any input I put in, and here's something I want you guys to think about. Anytime you add something, you are creating potential conflict. I'm a minimalist. I'm not saying you need to be one or even should be one. But if you think about decision making, if you have a matrix of inputs for decision making, and most of us in the retail space think more is better because with more, there's more certainty. But in reality, with more, there's more conflict and conflict and ambiguity, which, paralysis through analysis. The casinos are very simple. Blackjack, it's the same number of cards. Dealer shuffles the deck the same way, cuts the card. What is different? Nothing. That's how I look at this, because I did everything you guys have done, and I had more time to do it. That's all. So would you guys might spend months or years? I spent more years, and I can't tell you how many times I thought I got it now, and all I got was randomness, because it took time in a random environment to prove that something didn't work, even with statistics in system design. Now, this is trading systems. And I was a swing trader. I was not a day trader. We didn't have it back in the day. If you wanted to day trade, you were on the floor. So all my buddies were floor traders. I was an anomaly. We didn't have off-floor traders. And my goal back in the day was to earn enough to buy a membership. But instead, what happened to me was I ended up getting into this and figuring out that if I wanted to be a professional in the business, I needed to figure out how to trade and to become a money manager, which I did, and a fund manager. That's kind of where I ended up going. And I even ended up in the business by accident. It had nothing to do with wanting to be a trader. It had to do with hedging, interest rate risk. Different story. Other time, not relevant. So here, let's look. Now we know the market's long. Now this delta is showing short. So you got to understand delta. And I'm not going into it. But up here, see this is the buy delta. So up here are the buyers. Up here, and ignore the red line, it's showing me overbought. And I'm seeing the pressure in the book is extreme. And my delta, which is right there, is showing me buyers. So trap buyers. The trap buyers up here, and don't forget, it's a combination of longs with sell stops underneath. You got to think fuel. If this is too high, and don't forget, I've got my selling, right? Then here, I have a higher high, location, divergence. You remember divergence 101, and maybe a short, right? Let's look again. I come up here, get a higher high. There's my divergence. My longs are still here. Here's my delta. There's my short. That's why, if you're mechanical, you're going to have a pain. So for me, it isn't. But if I understand, and let me share kind of the point I want to make. In the Trader Lab, we talk about priority of inputs. This volume profile, which is showing participant behavior, in other words, volume and price, shopping, is the priority or the chassis that everything is built on top of. So this is the priority. Something like this is the last thing. And if it wasn't here, it doesn't change anything I've done for many, many, many years. In other words, it's not necessary to me at all, because before this happens, I already know where my next trade is. I can see the behavior without this. However, it's a piece. And here's the other part. If you're not a successful, profitable trader without any indicators, you then do not understand market mechanics. It's an opinion, okay? If you understand market mechanics, then you have the opportunity to build on top of it. It's like, what comes first, the chicken or the egg? Yeah, JYF, I'm not discussing market pulse. I'm showing you really behavior. This is really about auction market theory. You could get there's a lot of information on market pulse, JY, and I appreciate the question. But you really have to kind of look at it. Training period, now you get into indicators and curve fitting and all this kind of stuff. To me, it's just very much tertiary. But in my opinion, you cannot trade with this because now they're not buy-sell indicators at all. And you really got to understand delta and behavior and trap traders. So you really, in my opinion, I mean, for everybody, you need to understand why. If you don't know why, what this is, and I don't mean you specifically, I mean anybody. What's going on in an indicator, that's what you need to understand. And if you go to knowledge base, bookmap.com, there's examples of market pulse, its behavior, and you can read all about the algorithms that are in it. And there's a number of other algos that are in this. And again, for me, if it didn't have it, I don't need it. I don't use indicators. But I wanted to share this today because what comes first is the behavior of the participants, structured trades or setups that have an edge. So this trade exists without this. That's my point. So to maximize any tools, I think you need to know what's behind it. And most retail traders, and again, not about you, I'm just saying in general, put the indicators before the horse. Didn't you guys ever hear the term cart before the horse? Well, indicator before the horse. The horse is the market mechanics. The indicator is really tertiary and really, for me, I trade without indicators because I don't need them. Why, by the way, why would I do that? What is an indicator? It's a backwards looking reflection of market mechanics. It's a lagging output that is not sensitive to the condition of the market. I know I want to be short. Well, what does an indicator know? Does it say, should I be getting long here? Should I be getting long here because it's oversold? What should I be doing here? Where should I be getting short? Should it be there? I'm just making a point. Maybe not a good one. There. Oh, there's a short. What about this? There's a short. No. See, the thing about it is that indicators, and most retail traders, use indicators, and they don't know. They come out, and they buy a toolbox. It's got 50 to 100. I always ask, why? Why are there 50 or 100? Wouldn't 5 or 6 be okay? Then it's multiple time frames. Then it's optimizations. Then it's best fit, going back, retweaking, rejiggering. I call that trader Groundhog Day. If you keep waking up doing the same thing in a random environment, and here's the catch of the whole thing. When you're in a random environment, things work. The problem is, it's no different than the gamblers getting a random outcome. And they tweak and change and do whatever. Let's go see what's going on here, by the way. So this is a short, by the way, back to here. And then trade management. So short to there, that's this trade. And then trade management, whatever. So let's come back. What's going on? Oh, big consolidation. So let's look. Now, I think we have another trade right here. Oh, yeah, we do. This out here, let's come back and look at this. So down here, target. Oh, this is still our next target right there. So senior crime, this is our target. So this is really pretty much the target for the whole enchilada. So now we have VPOC migration. Let's label this too high. Now this right here, if we move this way, then the potential is to squeeze these shorts. Not a recommendation. Watch the behavior. This is not remember, I don't call trades because I'm going to use the term that I know you all love. I'm as clueless as everybody else. Why? It's random and I can't predict anything. And if anybody tells you they've got the secret sauce or the one thing you need, I would suggest you not let that into your head. because there's been snake oil is being sold since they first found snakes. So that's all I can say. Are there any questions, by the way? I've got about 10 minutes left. And by the way, I will not be streaming on Monday. We have a national holiday on Monday, Martin Luther King's birthday. So markets will be closed. So there will be no stream, and I know you're all going to miss me. By the way, this stream is available exclusively to Bookmap Discord Trade Lab participants over the weekend and through Monday to reverse engineer screenshots, replays, circles, arrows. This is what it takes. Continual research, self-reflection, a business plan. How are you going to get better? Or are you just going to come back tomorrow and do the same thing? By the way, this is a structured trade right here. I mean, it's not, but it can be. Let me show it to you. And this is advanced Trader Lab concept here. Let me show you. What was this? Does anybody remember what this is? Somebody help me from Trader Lab. What was this? 4812 half-ish. What was it? Previous volume point of control. Previous retail price. Oh, yesterday's close. KC, very nice. So this was retail yesterday. Let's think of a concept in fractals. This is retail. Inside of this microstructure is retail. I'm talking fractals. We break, here, watch. So we come up from above. I'm going to make it nutty. This was retail yesterday. So I break below it. All right, thank you. Come back above it. Support. Don't know. Clueless. Too high. Retail today. Short. Back below. Come back to the IB. This is a structured trade in the Trader Lab. Forgot all about it. IB continuation trade. It's a short. Not important. Back to here. Come back up. This was support. Old concept. You guys have heard of this one. Support becomes resistance. Where's it located? There. Let's look at the structure. Watch. Micro high volume. Here. Seller. Wow, I guess I missed it. Where does it come back? Here. Where does it come back? Here. Is that a short? Maybe. Are you guys tracking? It's just one trade. Chop, chop, break high, break low, seller, test, short. And this is advanced, not a recommendation. Then what? This is too high. What happens here? VPOC migration. And what did it just say? It has to push here. If it pushes there, they're going to squeeze this out. That's all I can tell you on this. Trade would be over right here. So if you took a short here, you'd get risk neutral. This drops down, and it's either going to push off or push off. Trade is done. That would be a little, that's for your sack of White Castle burgers, which if you are still doing those, you should talk to me because you don't want to. And this is our target on the outside. Is everybody tracking? Any questions? Can you see some logic to this? What was that question? If I see any trade from the news to market open? I can't say so because I didn't get involved. Yesterday we had a 10 or 20 point trade yesterday off the report long into the RTH open, but I didn't take any trades, so I can't talk about them. But the thing about it is the ETH is the last auction, so it does set up. Now, watch this here. This is a trade back to here. Let's look at the logic. And I don't call trades, but let's look at this thing. So we had the short here to here, VPOC migration. It either pushes off, but we did hit our target to the downside, so who knows? But I don't predict anything. As soon as this is too low, then it puts this on the table. So this is the following: exit the short or get long to here. And this is Trader Lab. Now, whether or not, and there's another piece. This from here is the IB, and this sets up a mean reversion back here. And because we hit our downside targets, I mean, the day might be basically done. But this is the next, and why would we come back here? This was too high. This is too low. Stops are at VWAP and mid and resting liquidity. So this is our target going up. Any final last questions? I've got about 5 minutes, and I want to invite you all to visit the Trader Lab. If you're in YouTube, there's a link in the bottom. And to bring you over to the Bookmap Discord server. You don't have to be a Bookmap subscriber now, ever, never, and Bookmap will never solicit you for anything. And there's a lot of additional free education, stocks, options, crypto, order flow with a high tier tool like Bookmap, of course, market maker behavior, algorithmic behavior, options, swing trading, and much more. I think I said crypto if you're inclined. And in the Trader Lab, there's 60 PDFs of these structured trades you can download and reverse engineer. If you haven't seen these, I'll just flash one or two up on the screen before the end here. And also there's a library of webinars that I've done, about 26 of them that cover different market conditions, changes, contextual changes. Some of them are up to 4 hours long of real-time narration. I don't have much time for real-time narration anymore because we want to give room for other, streamers with different ideas and different, things. So you can kind of, it's like a smorgasbord of trading, and you can find what psychologically aligns with you. There's no one way to trade, but I am going to suggest, though, if you cannot analyze it and reverse engineer it so it's consistent, then you're going to be sitting with the gamblers. And I always suggest, if you're going to gamble, go to casino, get the cocktails, get the ticket to the buffet, have a good time, sit at the slot machine, and you're going to win some, you're going to lose some. But the casinos have the edge. I think you should think like that, but not sit on the gambler's side of the table. Learn what the business of gaming is, and you'll understand the business of trading. Visit the Trader Lab. It's a community of like-minded traders who have all been where you are. We're all the same. By the way, we're all developing traders, believe it or not. And it doesn't matter how long you've been doing this. We're all the same. We all think we're going to find something in the public retail space that's been out there forever. When I first started, Wells Wilder was just coming into the mainstream. And of course, RSIs and Parabolic and DMI 80, I go on with all these things. Bollinger Bands, it's ridiculous, right? So everything was all great, Then oscillators. I shared an office with George Lane, as you guys know. He created stochastics. And once I learned about oscillators, I started creating my own, and then I went into trading systems. And I mean serious, programming and all that. I worked with Ralph and Bill Cruz out of Miami. They eventually created a product you might have heard of called TradeStation. Before that ever existed, I was involved in that. So I'm just giving you a little background, and that's not to say anything more than I've put the time in. And I've had the same results as you guys. So the time in is not the point. But the point is, I was waking up a trader Groundhog Day. In other words, I did the work, and I even gathered metrics. But what I didn't understand, especially from system design, is that I was optimizing a defective process that was ultimately random in a random environment. So I would get the aha moments, and then they would go into nuts, because I'd go up and down like in a random environment, like the gamblers go up and down. I didn't understand gaming. Once I understood gaming, It changed everything. Because then I understood I was doing it wrong. And I understood that I was doing what other retail traders do, which always got me back to the same place, which was a random inputs and a random environment. That's why when you see what I do and I share it with you, I don't use indicators, because I used them. I had more indicators than you can imagine. And so they were conditional statements with branch logic. I'll just go into that. And I'm going to say is, what I learned from that is to think in a conditional process, but have anchored inputs or definitions that take me down a branch of specific setups or structured trades that fit for the specific behavior and context. The problem we have is that the market is not a one-size-fits-all process. And because our indicators are really generic outputs, we're trying to fit a market that's dynamic into a rigid structure that is looking in the rearview mirror. Try driving Formula One by looking in the rearview mirror. And that's what we do as retail traders. So I'm going to suggest is, if you're looking for a different outcome, you're not satisfied with your results currently, and you keep waking up with Trader Groundhog Day, it may have nothing to do with your intentionality or your effort. It may be because your belief might be defective. I know what I believed. I believed I was doing the right thing. And I believed it was a matter of tweaking, tuning, adjustments, time frames, this, that, and the other thing, getting the screwdriver out like I was tuning the carburetor, on a race car. Not the case, because I kept coming back to the same place, Trader Groundhog Day. But I believed I was doing the right thing because of the randomness. Randomness fools us. We can believe we're doing the right thing because of the random outputs we get. But if we have random inputs, we're always going to have the same random output. And because it works sometimes, just like for the gamblers, we're going to end up in the same place, Trader Groundhog Day. If you're experiencing Trader Groundhog Day, I suggest you come to Trader Lab. You can download the 60 PDFs of the structured trades that I review here in the stream. Also, real-time narrations. There's 26, I think, streams that are posted there, different configurations. And what's really interesting, I think, is when the market changes during the session. We go directional, we go rotational. We go rotational back to directional. Or we just stay rotational the whole day and then have directional trades inside of rotation. I mean, it's crazy, right? How do you slice and dice that so you can operate it? Well, that's what the Trader Lab is about. And if you're in YouTube, there's a link in the bottom of YouTube. You can access this, plus the statistics I talk about in the stream, and a library of those webinars, and some up to 4 hours of real-time narration. I welcome you. Please give a thumb up in YouTube, and remember, this stream and these streams are available exclusively to Bookmap Discord Trader Lab participants and through Monday, and actually through the end of Monday until Tuesday's stream. And remember, we're closed. There'll be no stream, RTH stream on Monday because RTH is closed in the U.S. for a national holiday. I look forward to seeing you guys again. Thumb up, please, on YouTube on the way out. I hope you got something out of this. I hope you get value from the stream. And thanks again for visiting the Trader Lab today. And if you're in the Discord Trader Lab chat, remember this stream's available exclusively to you. Screenshots, guys. Develop your metrics, review your behavior, write down and journal your emotions, build a plan, follow a plan, and let's continue to improve together as a team. This is really a community, the Trader Lab. And if you're out there now, you don't need to be on your own. One thing about a community is we leverage our collective experience. Our senior trader has about 54 years experience. I've got going on 44. In a way, it's a badge of honor because I'm still doing this, and I've paid the dues. And you guys, whether you know or not, are paying for the privilege to learn. It's education. The thing with education is, are you going to keep paying tuition and repeating the class, or can you get a yield from all the effort and time and wear and tear you've taken to attempt to learn this business? I think we can potentially save you some time, maybe some brain damage, and maybe being in a community with traders who have similar experiences and diverse ones, you might be able to leverage that experience and create something for yourself that's better. And again, of course, your mileage may vary, and past performance is never indicative of future results. Take care again. Thumb up in YouTube, and I'll look forward to seeing you guys next week. Have a great weekend and trade safe.